In this video, we try and guide you how to choose the right balanced advantage fund that would suit you. This is a particular category that is seeing a lot of small and new investors who have started investing. Why is this? Because these funds follow a very dynamic asset allocation model, shifting the assets between equity, derivatives and debt. Due to this, there is a good balance between risk and returns. So now how do you choose the right balanced advantage fund which would suit you when there are so many funds in the category and each AMC follows a different model to arrive at the equity valuations, and thereby fund to fund the equity, debt and derivatives composition varies. Due to this difference, there are funds with low, medium and high risk return characteristics. There is huge variation fund to fund, as I mentioned earlier. Now to show how different one fund in this particular category can be different from the other, we try and show you the difference in attributes of two large balanced advantage funds, ICICI Prudential Balanced Advantage Fund and HDFC Balanced Advantage Fund. To clarify to you, funds are so different and you will have to be very careful in choosing the right one. This particular pictorial representation shows how the equity valuations of ICICI BAF is arrived, and accordingly the equity exposure in this particular fund is taken. So as you see here, when the equity valuations go up, this particular fund of ICICI reduces exposure to equity. Similarly, when the equity valuations are down or low, they increase exposure to equity. The next picture shows the way the fund operates, which is HDFC Balanced Advantage Fund operates, and the equity valuations are arrived. The trailing 12-month price to earnings ratio and the earnings yield to GSEC yield ratio collectively, based on which is the equity valuations is derived by HDFC, and accordingly the equity exposure the fund has to take is decided. Now this particular slide, which is very important, tells you how varied the equity exposure of ICICI and HDFC BAF has been over time periods. So this particular chart has the equity exposure month on month taken by ICICI and HDFC from March 2020 when COVID hit, since that to December 2022. So in the first month, which is March 20, when the Sensex levels was 29,468, ICICI BAF had an exposure of 74% in equity and HDFC had 82%. Let's take another month for comparison's sake. In June 21, when Sensex levels were 52,482, ICICI BAF had 39% exposure to equity. At the same time, HDFC BAF had 70% exposure to equity. So across the time period, if you see, in most of the month, ICICI has taken a very conservative exposure to equity, and in the same months, HDFC has taken almost double the exposure, and thus goes on to say how aggressive HDFC has been. So this particular chart is good enough to tell you funds can be so different, and in this particular case, somebody who is a conservative investor should have chosen a ICICI BAF, and somebody who is aggressive should have taken a HDFC BAF that would suit his risk appetite. After seeing the slides, does it sound very complicated to choose the right balanced advantage fund? Also now remember, we only discussed about two balanced advantage funds, ICICI and HDFC. If there can be so much variation between two funds, there are about 29 funds which are in existence today, and each of the fund is completely different from the other. Now, don't you think the task with you is really heavy to choose the right balanced advantage fund? To make it easy, you can contact an expert who has data and analysis of these funds, and you can also choose to contact us.